Here we go. How you doing, friends? Ernie here. It is Monday, the start of a new week in zero DTE land. No, I'm sorry, zero dash DTE. The start of a new week, and at least from a market perspective, it was very interesting. Unfortunately, as a group, we didn't get to participate in it. We had a very, very nice trade on, and it started to work until the market opened. We had put the trade on the night before, and it was doing fantastic. Looked like a big winner, making profit. Market opens, and it does an about face. Unbelievable. However, let's see here. I just have to turn off that little voice there. However, that's okay, because with our strategy, we take on asymmetric trades. And what does that mean? That means that we take on a very small amount of risk for potentially a very large amount of profit. And this would have been a nice one. However, I didn't see it coming. I did not see today's move coming. I probably should have, but I'll tell you what I see coming in the coming days. Now, right now, this move down today in the S&P equals a move that it had on Friday. Well, actually on Thursday, and then Friday was an up day on Thursday, and which marked about a 5% 5% pullback. Or I hesitate to call it a correction yet, but we are headed into correction territory. There's no doubt about it. And the reason why I think that we're headed into correction territory is that we're sitting on the edge, on the the edge of a cliff, the edge of a volume profile cliff. We're sitting on the edge of a deep well. And we've got our feet hanging over on the edge of the well, and we're hanging on. The edge is kind of hard to get a good seat, and it looks like we might fall into that well. And if we do, I can see another 5% down in this market. What am I talking about? Well, as you probably know, if you've been watching this channel for a while, you know, excuse me. Peanuts in my throat. As you probably know, that I am a volume profile aficionado, and right now we are on the edge of a major volume well. Now, what characterizes a volume well is really the behavior that price has when it enters a well. Now, what is a well? As opposed to a volume node. We have volume nodes, we have volume wells. This is my own terminology, by the way. I know that other people call them low value nodes and high value nodes. It's not really a node, right? So why would you call it a low value node? It's an absence of a node. So that's why I call it a well, which seems to be more appropriate to me. So anyways, we're at the edge of this very, very large well. And price, when it has a certain behavior as it moves across what I call the market structure, or all of these value nodes. So you have these value nodes that are levels where there's a lot of volume. And we can see those levels very clearly with the volume profile. We can also see the levels where there's a complete absence of volume. And that's what I call a well. Now, it's really very important because price has a tendency to be attracted to volume nodes, or what some people call high value nodes, which I think is a dumb name. And price gets rejected by volume wells. And I've given the analogy that it's very much like the desert and then the mountains at the edge of the desert. The desert itself, it's flat, it's hot, inhospitable. You do not want to be there. And the mountains, it becomes cool, and you slow down as you're getting into the mountains, and you go up and down, and it's hard to get through it. But there's probably springs there, and of course, pretty girls, and so you want to hang out in the mountains. In the desert, not so much. You do not want to hang out in the desert because it's friggin' hot. It is so friggin' hot. And the worst thing that could possibly happen is if you got stuck in the middle of the desert. Could mean bad times are ahead. So to me, that's the difference between a volume well and a volume node. Price enters into a volume well, and it wants to move through it very quickly. The volume well represents those periods in a market where the market is trending. The volume nodes represents those periods or areas in the market where the market is consolidating, or where it's trying to find value. So typically the way it works is you have bigger players. I call them out of time frame players. And they are, in some parlances, you would call them the whales. And the whales are totally responsible for pushing the market into an area where it wants to find value. It's in a search for value. And once they've pushed it, it moves very quickly. It moves very quickly when there's a lack of volume or whatever, and it moves very quickly through those areas. And then once it finds value, it settles on it. They've done their job, and then the rest of the players come into play, and they churn over it. And that churning is that consolidating area. Well, that really precisely describes what we have going on here. Only instead of going up into a volume area, we're going down from a volume area into a volume well. And we're right on the edge of a very deep volume well. And one thing, when you see a very deep volume well, the behavior of the market as it traverses something like that kind of thing gets amplified. So I expect price, once it enters there, it will probably move very quickly, and it will either, once it gets halfway through, either get rejected and come right back to the other side, or it will move through it very quickly. Now, my guess is, my swag, my scientific wild ass guess, is that it's going to move through very quickly, because we already have what seems to be an established bearish trend that is coming off of this huge. There's another question. Have we changed the trend now? I mean, we've been in this long ass bullish trend for, it seems like, forever. And now it appears that there's a different character in the market. We're turning around. Is 5% enough to call it a trend? I don't think so. Is 10% enough? I think that's the start, right? And will 10% be the ultimate pullback in this market? Now there's a much better question. So let me show you what I'm talking about with the volume well. All right. So the nodes, obviously, are these things that are sticking up. Those are areas of consolidation. And if you follow across them, you'll see that I've outlined them with various boxes, and I've labeled them T0, T1, T2, Tn. And that represents the best guess order in which those nodes will be visited by price. So right now, I'm pretty confident that our next landing spot for price is going to be T0, or right around 42.40, 42.25, right in there. That's what this is right here. So here we are right up here. D1 and D2, I called those dip 1 and dip 2. And if you look very closely, you'll see that they are marking very low volume areas. And those low volume areas tend to provide some level of support. Now, it's not really the volume areas that it's providing the support. It's that you have that low volume area and price tends to slip into it, and then it sees a node on the other side. And so there are buyers on the other side of that wall. And that's what makes up this tiny little child node here. And price will often come down and seek out these little low volume areas and then reverse. In fact, that's what has happened in every spot. If you go back and look at a daily chart, and you were to map this out onto the volume wells, and see, we can't see it right now because of my setting. We need to turn that into a number of rows, and let's put 180 rows. All right. So every time we've pulled back, as you can see here, and I'm indicating the pullbacks by these purple arrows pointing up, you can see that we were going into one of these little crevices. And then, like this one here, is another little crevice. And then this one here, another little crevice. And then this one here, a big crevice. And then this one, and so on and so on. But if you look carefully here, right up here, we'll pull this out so you can see it a little bit better. Right here, this area right here, huge volume well. For whatever reason, price between, let's say 39.30 all the way up to, let's see, all the way up to say 41.44. There's a huge well. But there's another one right here that we've already entered, and we're starting to move down through it. And the next landing place is going to be right about at 42.39. So this is going to be the next area. All right, now let's see if we can get some more data here so we can see this a little bit better. All right. So you can see this is going to be our next landing area. Now if we get beyond this major node here, there's nothing below here for a long time. There's a minor child node, but the next significant node is way down here. And I think that there's a very good chance, right around 3,900. Starts at 4,000 into 3,900. I think there's a very, very good chance that we could enter this node and move down very quickly. This is a huge danger area. This is a danger area that we've already fell into. This is a minor trap. All right. This is a small desert, and we've moved across it. We've almost gotten to the other side. And then we'll find value here. That's my best guess. We're going to find some value here, and we'll call that the T0 node. Then the next logical move, because we are in what I think now, once we get to this node, we'll have established a downward trend, which is very different from this upward trend. So in other words, if we get down to here, down another 100, 150 points, we will have established a new trend. And, you know, typically I say new trends are anywhere from minimum 3 weeks to 6 weeks. And that's about exactly what we'll have here. We'll have about 3, 4, 5 weeks. And so that will be a new trend. Now, trends tend to go until they stop. Now I expect that when we get down to this major node, there's going to be some consolidation. And as you can see over here, this node is defined by this whole area of consolidation. Let's see, let's take this rectangle, and we'll just kind of outline right here. Let's see. Goes down to there. There. So you can see if I were to move this right over to there, you can see how it encapsulates that node. All right, and so there's that area of consolidation. I think we're going to come down there and meet that, and there's gravitas there. We'll hang out here for a little while, consolidate, and then test this area below. This line of demarcation, where you have a very steep slope on the value node heading into the volume well, that is where we find support and resistance. This is the line of demarcation for markets. If we enter into the well, it's a slippery slope. It's either we are fully committed once we get in there, and when you get in there, you can move fast. You move fast because there's very little activity. There's very little open interest. There are very few players there. And so liquidity is low, and it's easy to move through those areas. So once we get in there, because we're on that trend, it's like a slippery slope. I believe that we'll move very quickly until we get near the bottom of that well. Now that's like you're in the middle and you're deciding, man, can I make it to the other side, or am I going to go back? And that's typically the place of rejection when price has moved into a well. So we're going to move down here eventually. There's going to be some hesitancy here, and it's either going to move very quickly down to the 3,900 area, or it's going to get rejected and come right back up here to the 4,200 area. All right, so that's what I see happening in the next couple of weeks. And for October, let's see, October would bring us right out to about here. So if we were to follow the natural progression, it looks like maybe near the end of October is when we decide or come to this conclusion. So if you look at this linear regression channel, it's kind of defining what this downward channel might look like, or this downward trend. I'm not saying it's going to be exactly that, but that's probably a pretty good approximation. And if we look at the date down here, it looks like we're going to meet down here around mid to late October. And then later October, I think, is the time frame that we're going to test this volume well. Now there's the question. Are we going to buck the trend, the 50-year trend, where markets tend to improve after September? October is not the best month, but it's definitely better than September. Will this October be a good month or a bad month from a market point of view? From our point of view here at 0 DTE, this movement down represents volatility. And so I've got nothing but bated breath here. I'm looking forward to this, because volatility is important. And as you can see from the title of this episode, what is the title of this episode? Should you take the elevator? Let's see. Should you take the elevator or the escalator? So when you move down, you tend to take the elevator. When you move up, you tend to take the escalator. In other words, moving down is a sharp, violent move. Straight up, straight down. And then moving up tends to be gradual, metered. But I think right now we're in elevator land, baby. We're going to move down with some ferocity tomorrow, and then maybe move up and down, up, down, but generally down. And then we're going to work our way down here to mid-October, where we're going to challenge this mammoth well. That's how I see it. To me, that looks like opportunity. That's what I expect. All right, back to the big head. should be stairs versus an escalator. No, I think elevator versus stairs or escalator. So stairs and escalators are, similar, but they're definitely both different from elevators. Yeah, you could go stairs versus elevators, but now we're really nitpicking here, Lance. But that's what I see. I think that this total move looks like it's going to be at least another 100 points and possibly test this huge volume well. If we hit into this volume well, I'm not so sure that we're going to move through it. If we do get partway into it, I suspect that the plunge protection team will come to the rescue. That's the Fed, and do what they can to prop up this market, like they always do. But this market is really reeling and in need of a healthy correction. And this would provide it. In fact, I think that a nice 15% move would do about the best kind of work. All right. There you go. There's my my analysis, my volumetric analysis for the markets going into October. October is going to be a ride on the elevator, not the escalator. Thank you very much. We'll see you next time. Well, how about a long-term vertical 2 weeks out? Maybe. We'll talk about that in the room. All right. Thank you very much. We'll see you. Peace.